You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. You wanted it, you got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Bootcamp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, the Options Bootcamp drill instructors will break it all down for you. Now, let's get you into peak options trading shape. Here are your Options Bootcamp drill instructors.
All right, everybody. That music means it is Education Wednesday. Once again, we are back in action, hats, whistles in hand, ready to go for a little bit of the old Options Bootcamp. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. I will be one of your drill instructors today on the old OBC Proving Ground. Remember, if you like what you hear, if you're listening on demand, as I know many of you are, then keep rating and reviewing. You could argue it is more important than ever these days to keep that stuff churning and burning as new folks are discovering the content all the time. If you want to go above and beyond, join us live, ask questions live, participate in all the other fun live stuff we have going on throughout the week, usually a couple of shows a day you can get access to. They're live, as well as a couple of exclusive shows we only do for you cool secret club folks, like pro Q&As and options oddities and giveaways and whole bunch of other fun stuff. Theoptionsinsider.com/secret club is the place to go to learn more. The secret's kind of out, but we'll still call it that because it's just fun. And then, of course, however you listen, live, after the fact, on demand, YouTube, Donkey Cart in Estonia, whatever floats your boat out there. Keep sending in those questions, even though I probably need to say that the least for this show because you folks are always ready and willing with the questions here on Options Bootcamp. And joining me, my fellow drill instructor here today on the old OBC Proving Ground, once again, the black-hatted one himself, Mr. Dan Passarelli from Market Taker Mentoring. Also, along the way, he wrote one or two or half a dozen options-oriented tomes. Mr. P, welcome back to the Options Bootcamp program, sir.
Good to be here, Mark. It is a good day to be boot camping.
It is a good day to be boot camping. And, you know, it's funny, we have other programs, obviously, on the network, which, by the way, listeners, if you haven't subscribed to the full network yet, you're just mainlining Bootcamp. Get on over there. You're missing out a whole heck of a lot of stuff. And, Dan, every week we kick off our broadcast week here on the network with the Option Block Show, and we do something fun every week. Usually it's 80s thematic. We were guessing TV show themes for a while, then movies. It kind of evolved into an 80s wrestler guessing game for a while. Guess the wrestler by their entrance music. That's been kind of fun. But this week, given in light of what everything that's going on in the world, what we all witnessed over the weekend, one 80s film came to light for me, sir. And so we did it. We did Red Dawn on the show on Monday, and that seemed to really get some response from people out there. People loved it. People were writing and said, man, I thought of Red Dawn in 30 years. Thanks for doing it. Other people were like, man, that movie is crazy. And by the way, the answer to both of those comments is yes. The movie is awesome. It is also completely bonkers. They are not mutually exclusive. Mr. Dan, I'm curious for you, before we dive into the madness today, do you have any fun memories or thoughts or associations with that most 80s of films, Red Dawn, sir?
Dude, I'm trying to have a hard time remembering that. Is that like
Charlie Sheen, Patrick Swayze fighting off the hordes of Russian invaders in what I thought for 30 years was Michigan, but apparently now is Colorado?
Oh, yeah. Like I remember
Wolverines. Yes. That's why it's Michigan. That's why they're the Wolverines. But apparently they changed it in post-production to Colorado, which just dismays me to no end. But yeah, a great film, but no enduring memories of Red Dawn, sir.
That basically is the extent.
That's it. He remembers the name and he remembers. Listeners, now you see why we don't do that segment on this show. Instead, let's keep on rolling right on into your mail call.
Mail call. Time to look at questions submitted by our listeners.
All right, everybody. Welcome to the mail call, the portion of the show where you guys take the reins, your questions, your comments, your insights, your pearls of wisdom. And let's start out, Mr. Dan. Folks tend to want to know these days. What you up to? What's your rating, sir? What's your take on the madness we're seeing as the markets go hither and yon? Once again, this time driven by Ukraine, sir.
Oh, man. Yeah. It's just actually Options Raider did give us a whole bunch of signals today. We have US Steel and Rocket, BBIG, RSX, HGen. I'm getting filled on my Fro trade, which is not an Option Raider one, but
it's like you just bought some BBIG, sir. Bought some Rocket. You love your Rocket.
Yeah. So so it's all going well here, man. Can't complain. We've been looking into like credit spreads, just kind of basically playing the high volatility and the kind of oscillating movement, So basically when the market really sells off, I start looking for not so bad stocks that maybe sold off too hard and write some credit spreads on them. And then when we get a big rally up, then it's the opposite, sell some call credit spreads is what I start looking at doing. But I got a lot of different things going on here.
Dan, you're freaking out our live listeners. They said they thought they got filled on trades instead of you. So they were checking their fills because they heard your alert. But no, it was Dan doing his rating while we're in the middle of a show here, listeners, as he is wont to do. Speaking of which, I was joking yesterday on our Pro Q&A about my UVXY butterfly. Maybe you want to fade it, but looking pretty good right now. UVXY back in erosion mode. So again, but as we said yesterday, just buying that stuff straight up to the downside, that's expensive. It's risky. We could always shoot back up. You could end up wearing a lot of premium out there really quick if Putin decides to go off the chain again. So that's why you have to sell something against. That's why I like that fly. Mark was talking yesterday about iron condors out there, which is an interesting approach. You're selling two legs there, but as long as you're selling something against it, you're looking a little better, and that one's looking pretty good right now. Let's look. Speaking of things that are looking good, you guys, I mentioned at the top of the show, you guys, it's more important than ever for you folks to go out there and leave us reviews. So we like to go out every now and then and find some of those 5-star reviews to share with our listeners. This one came from Ray's Pull. A whole bunch of letters in there. I believe this is Apple Podcasts. He says, 5 stars, one of the best. Top shelf. By the way, I think we're the best, but hey, I digress. I'm not going to split hairs with your nice review. He says, top shelf information shared by Mark, Dan, and crew. Help me continue to set my game up, I should say. I'm subscribed to all of the Options Network podcasts, 5 out of 5. Well, thank you, Ray's Pull. We love you out there. Everyone else takes the time to rate and review and all that fun. And before we keep going, Dan, we got some polls, we got some questions from folks, but I know you get a lot of questions from your mentees and your listeners out there as well. So if you would like to regale us, sir, what is the Dan's MTM question of the week?
Oh, the question of the week has to do with what is the difference between VIX and VXX. So that one is something that everybody should familiarize themselves with. These are really some of the most complicated option trading products out there. And I think a lot of people jump in and start trading them without really understanding what they do. So VIX is, well, first of all, it's simply an index. There are options listed on them, but it's the implied volatility of the SPX. The options listed on them, the underlying is not the actual index. The underlying for VIX options is the expected forward value of the VIX 30 days out from today, which is kind of weird. We don't really have a lot of options out there like that. So that in and of itself is complicated, but then VXX takes it a level further because VXX, which I'm going to pull up here for just a second, VXX is an ETN where they hold VIX futures in the account. But as we know, futures expire at some point, so they have to roll monthly. And because of the nature of the term structure of the VIX future complex, it bleeds a little bit of value month after month after month, and so there's like a natural downward bias to it. So we could talk about a whole show about this stuff, but that's a little bit of a crash course for people who aren't familiar with it. And hey, maybe we can do a show on that at some point in the future.
Well, we do have a whole show on the network that talks about that a lot every week. It is Volatility Views. So if you want a deeper dive into the many and varied and layered differences between VIX and VXX. So we've had great guests on over the years debating the reasons why VXX gives up so much to erosion. But if things like roll yield and all these kind of things, if that stuff confuses you listeners, check out that show. And maybe, I don't know, Dan, we haven't done a vol-themed episode in a while. I think maybe we should revisit that, sir.
Yeah, that's a great idea, man. That's a really great idea.
All right, I think we got some more vol questions in here, so we'll be getting back to that. But that's something that floats your boat, listeners. Does that intrigue you? Kind of doing a deep dive into all things vol, some of these products like VIX and VXX. VXX getting more popular these days, and even UVXY. I was just talking about UVXY earlier in today's show. Another product, I should say, that fades amazingly in certain scenarios out there, depending on how the VIX futures are lining up. But there are days where VXX will do more volume on the options front than VIX will, which sounds kind of weird. It's kind of like the tail wagging the dog, this effectively derived product from this doing more than the actual product. But it's intriguing stuff. We get into all that in a lot more detail on Volatility Views, listeners. So check that out. And if you want us to do a full vol deep dive, haven't done one of those in a while on the show, might be kind of fun. Hit us up, let us know. Just like we got some love here from Theta Noob. I just like this guy's handle. I kind of wanted to feature it just for that. But he wrote in after our last show. I think he was in the middle of a conversation on Twitter with someone else. They were discussing their favorite or least favorite options-oriented shows, and he chimed into this person. He said, I used to listen to this, shall we say, other show. I won't name what it is. We don't want to slam other shows. He said, but I stopped because they no longer seem to add any value for me. I now listen to Options Bootcamp only. I still find tremendous value in insights from Mark Longo and Dan Passarelli. So there you go, Dan. He has eschewed all other options content. Hopefully not my other shows here at Theta Noob. Hope you still like those. And he is only listening to our show now, Dan, just Options Bootcamp. What do you say?
Well, I think that that's quite an honor, and I certainly appreciate that.
I think he's selling himself short. He is clearly not a noob. I'm going to call him Theta Pro from now on because he is clearly a discerning man with excellent taste. Or woman, we don't know. A discerning person, discerning trader with excellent tastes out there. Well done, Theta Noob. Let's go on out now. This one's kind of hot and heavy. Right before showtime, we went live with this. This is our question of the week. This is something that's been weighing on everyone's mind, obviously, for the better part of the last week and even further to the beginning of the year as we saw a lot of vol creeping into the markets. But we asked this week, Ukraine, the Fed, and more have been weighing on the markets lately. Obviously not today. A little bit of a Fed rally out there today. But how are you adjusting your trading in these trying times? And we gave you 4 choices. Are you out there bargain hunting right now? Is it BTFD time? Are you reducing your equity holdings? Are you straight up buying crypto? Are you hedging your positions? Or if there's something else we don't see there, again, you always can write in with your alternative. Mr. Dan, if you have a thought, have at it. And more importantly, what do you think our audience is up to? Are they bargain hunting? Are they BTFDing? Are they paring back maybe some of their equity exposure? Are they loading up on crypto? Or are they keeping their positions but they're hedging?
What does BTFD stand for?
You don't know?
No.
It's buy the freaking dip. Let's just make it family friendly.
Oh.
You're the option raider here. I thought you were like the king of BTFD.
That's right. Okay, yeah. It slipped my mind for a moment. Well, you know what? I am going to say probably reducing equity holdings.
Yeah, that might be a sensible position in this, but not our audience. They're hardcore, Dan. They're gung-ho. They are BTFD and hard, 50% exactly right now going out, getting some bargain hunting. It's kind of hard to argue with some of that. Some of these names, especially some of these, if you look beyond the broad indexes maybe, but look into some of the single names that were high flyers early on in the pandemic that have been beaten up, your Robin Hoods, your Palantirs, whatever, pick your poison out there. There's a lot of those that are markedly lower than they were, let's say, a few months ago. So I could certainly see an argument maybe for some bargain hunting there, followed by a third saying you're hedging your positions right now, and only 16.7% saying you're reducing equity holdings. So far right now, 0%, no votes for crypto. Again, this just went live a few minutes ago, so these votes will change, but intriguing stuff here as we keep on rolling. Are you into the crypto? The crypto markets are getting the love of late. We were joking on our, by the way, another show you can check out on the network, listeners, our crypto rundown program. We were joking there that Putin and his ilk are going to be out there gobbling up all the BTC in light of the sanctions. And it seems like somebody certainly was. Bitcoin, ETH, and all the other major crypto getting a nice lift earlier this week. Let's go on out to Ron. Ron XOXO. Okay. We love you too, Ron. He says, hey guys, I'm really having a hard time getting started with options. Well, came to the right place, Ron. He says, I have a Robinhood account and it's funded. I'm looking at a few stocks, and he puts in here Ford, Rocket, Spy, and Hood. Oh, Rocket. There you go, Dan. Right up your alley. And Robinhood to start with. But I just can't figure out where to start. I want to get long some of these names, so I'm looking at buying calls. How do I go about choosing the right call strike to buy? So Mr. Dan, he invoked Rocket, so I have to let you chime in on this first. But he's looking at getting started. He's kind of one of our prototype kind of listeners to this show, looking to dip his toes in the options waters. He wants to buy a call. He just has no idea where to begin, Dan.
Mm-hmm. So you kind of I like to say, let the market tell you which call to buy. So it kind of starts out with your very specific forecast and objective. The simplest of which is, how long do I plan on holding this trade for? If you plan on holding it for a month, you don't want to buy a 1 week call, and you probably don't want to buy a leaps call. It should be somewhat conducive with your objective. You probably want to buy a little bit more time to minimize the theta. The next thing is your strike price. So if you go deep in the money, it's more like a stock replacement. You have a really big delta and you have very little optionality, meaning very little time decay, less vega, so less susceptible to changes in implied volatility, and also less gamma. So it's just more like sort of buying a substitute for the stock, a leverage substitute. If you go at the money, you get the benefit of having gamma right from the get-go, but you have the time decay. So like, I typically use at the monies with stocks that I think are going to move like right now, so that it moves away from the highest theta. And then out of the monies, I use when I am expecting a really big move because they end up being cheaper. And if the stock does make a big move through there, you move through the highest gamma point, to the highest gamma point and through it. So you can just get like a really super exponentially leveraged profit if it works out as planned. So that's kind of the broad stroke overview of it. Pick that ball up and run with it, and don't be afraid to come back with more questions on it.
Yeah, I think Dan took you on a nice little journey there. It does obviously depend on your outlook. You haven't shared what your thoughts are. You say you like them. You don't say, to what degree. You have to obviously do that legwork first. I expect this much movement in this name by this period, and that will help you start narrowing things down a little bit. As Dan mentioned, if you expect to pop in the next month or two, maybe you don't want to go to a leap, and vice versa. If you expect things to take a little bit longer, that'll help you narrow down your time frame. And then strikes will also help you as well if you expect what kind of movement you're looking for. If you just want to load up for the fences, 3 delta calls and put all your money on that, well, we can't help you except to tell you not to do that. Please don't do that. We want you to be around for a while to actually listen to this show and learn and improve. So baby steps. You're starting off the right way, Ron. You wrote into us. Let us know what you decide and give us some more details if you can. What you're looking at, strikes and months and things like that. And we'll try to walk you through it. We're here for you folks. At the end of the day, that's what we're here for. Just like Nico. Dan, you were talking about vol earlier. Nico, says, this whole Ukraine thing has me looking out for ways to get more exposure to the volatility space. But VIX is made up of U.S. companies and predominantly trades on U.S. hours. I'd like something with a little bit more European exposure. Does that exist? And the answer, it's funny. We get these questions, I wouldn't say frequently, but the last time we got a lot of questions like this was pretty much the last time Putin fired up the old invasion machine and went into Crimea there. We had a lot of people asking a similar thing. Hey, what can I get that's a little bit more exposed to European names and European volatility? And you are in luck. Such a thing exists. There is V-Stocks. These are put out by Eurex in partnership with our old buddy, Mr. Sean, used to be on Twifo. He's over there at a firm called Contigo now, and they actually disseminate these indices that trade on Eurex. But you may have heard of the Eurostox 50, kind of like a European SPX, obviously not with 500 names, but 50 names out there. Well, they also have the V-Stocks, the volatility index of the Eurostox out there, and they trade futures and options on them. Now, those trade on Eurex, so maybe a little bit difficult for you to find at your broker of choice. But if you can't find them, contact your broker and say, hey, do you guys have V-Stocks? You can also get vol futures on the Eurostox 50 itself. So there's kind of a couple of different products offerings. If you want to check those out, go over, maybe the best place to go, you can go to the Contigo. It's hard to spell, Qontigo.com. They're the disseminators of the indexes to learn more about them. Or you can go to Eurex.com, Urex.com. They will have listings there for what these products are, the specs, what they're comprised of, when they trade, all that kind of stuff. So you can decide if you want to get in on them. And now, caveat supply, VIX is going to do, some days can do 1 million contracts on the options front and a decent amount of futures as well. You're not going to get that in V-Stocks. It is a little bit less liquid, shall we say. So a little bit different out there in terms of size and liquidity. So bear that in mind. Market's going to be a little bit wider out there. You may have to wear stuff for a little bit longer. You may have to work stuff a little bit more aggressively, hit bids, lift offers to get things done. But if you want that European exposure, and right now that's kind of it. I mean, international vol products, there's a Nifty VIX, which is like an India VIX on the Nifty index there. And there's V-Stocks, and that's kind of really it. VIX is really the big game in town. There's not a lot else. Dan, do you have any exposure or any familiarity with these V-Stocks products? And do you have any other recommendations here for Mr. Nico, looking to get a little bit of European flavor in his vol?
I'm familiar with, but I don't have much experience with it, TBH. And yeah, I mean, it sounds to me like that is probably your best bet. Just good sound advice, Mark, for looking at that one. The liquidity angle does kind of suck a little bit, but, what are you going to do, Yeah,
this is definitely a beggars can't be choosers type of scenario there. But I have talked to the V-Stocks folks trying to get more awareness of this product. It does exist. It's a good product. If they can maybe drum up a little bit more liquidity, that might be a way to improve the action out there. So again, that's something hopefully maybe we'll be talking about more on the network here down the road, because I would like to offer you alternative ways to trade vol. I mean, VIX is great. We love spikes. Obviously, that's a great one there. We talk about on vol views a lot as well. But you're right. They don't have the international component that I know some of you, especially right now, might be looking for. Let's go out to full side. He's got another sector. He's going to move beyond European vol, though. He's going into energy, which, again, not surprising given what's going on out there right now. He says, are you guys trading a lot of options on UNG and XLG and other energy names right now? And any pro tips for us options noobs? First off, you guys are writing into us, so you're not noobs. You've taken that proactive step. You have elevated yourself already above the noob level. So stop doing yourself a disservice. You are not noobs. But Mr. Dan, I know you're busy raiding a lot, but do you sling a lot of UNG or XLE or some of these other energy ET? I don't think we've ever discussed these really before. Are you a big fan of these? Not a fan?
I mean, I'm potentially a fan. I have not been trading those lately. I took a picture. I took a position in a stock, FRO, specifically in their options, which is a company called Frontline Limited, which is like I don't know, it seems to me that they rent out oil tankers from Mid East and Africa. And that one just really climbed over the past month, really, as a result of this whole Russia thing, because people aren't buying oil from Russia, which some companies are just sort of voluntarily deciding to not do so. They got to get it from somewhere else. So I think that's why that stock ran up. I still have some calls in it. I took some profits yesterday, still have some. It's down a little bit today, but probably still a pretty reasonable play.
Like I said, I don't love these names, UNG and XLE. We were talking about VXX earlier and its issues with roll yield. You're going to encounter something similar with a lot of these ETPs that attempt to replicate, whatever it is. It could be a front month natural gas futures position. It could be, in the case of XLE, maybe some more energy-oriented equities. The devil's in the details of all of these products, obviously. So it looks at the construction. You have to look at what they're holding. We pulled up UNG. We had a question about it, I believe, last week on Twyfo. We saw it's sitting in 50% cash right now, which is maybe not exactly what you want. You want them to put those assets to work out there on the natural gas front, and they had other holdings in there as well. But they're going to suffer from roll yield issues and other things like that. Maybe not right now, because a lot of these products, and I don't get too complicated with this, but a lot of these futures are trading in a condition what's called backwardation, which means the near dated contracts are trading at higher price levels than the longer term contract, which is not normally what you see in the futures market. So in those types of scenarios, products like could be a VXX, or I mentioned UBXY in the vol space, or some of these other ones like maybe a UNG. I'll have to go check their rebalancing cycle as well. But if they rebalance frequently and they're trying to replicate a front month futures position, they could actually benefit from that and actually rally a bit over that time. So it's got a lot of moving parts to these things, which is, if you're going to play in these, it's fine. If you want to take a little bit of a shot at, hey, this thing is going to happen, you think Putin's going to dive in. Maybe a week ago you wanted to load up on UNG or others, I would just keep it very short term. A lot of these things are going to suffer from these wasting characteristics. You don't want to get caught buying and holding a product, a USO, whatever it is. There's those same problems with USO as well. So make sure, you know what you're buying, do your due diligence. I know that's not fun. It's not sexy to say that, but a lot of these products have inherent weaknesses that if you're not familiar with, if you buy and hold them for a long period, 3 or 6 months, you're going to find yourself, wait a minute, why did I underperform so dramatically? It's because these other things are going on behind the scenes that you weren't familiar with. If it's viable for you, I always recommend people to go straight to the source. If you want to get long nat gas, there are pretty deep and liquid nat gas futures over there at CME. On our This Week in Futures options program, we were talking about it last week and the week before about how nat gas was trading around the low $4, and they were trading in bids all the way out to almost the end of the year on the 7 strike out there. So if you want that kind of stuff, it's there. I get it. It's futures. It's a little bit intimidating, and futures options, but you're not going to suffer from any of these issues if you go to those. So I tend to prefer and recommend those whenever possible. I know for this audience, that's a bit of maybe a bridge too far sometimes, but it's certainly something to watch out. If you're going to trade UNG or some of these others, not so much XLE, but UNG and some of these others that really try to replicate the futures, those keep it short term. You don't want to be holding them for much longer than a week or maybe even a few sessions, and then get out and live to fight another day. Take your pop. UNG had a nice pop. Others had a nice pop. Take your pop. Get the heck out of Dodge. Live to fight another day before the erosion kicks in, before the futures curve gets back to normal and that thing starts wasting away again. All right, let's go out to Max. Maybe we need to have a conversation about contango and all this stuff, Dan. Maybe we need to do a full deep dive into vol and vol futures and the term structure. What do you think, sir?
Yeah, that would be a good show for us.
I just think I'm scaring people when I start talking about contango and backwardation. But, they got to learn sometime, right, Dan? Why not now? Why not with us? In a safe place, a safe environment. All right, let's go on out to, let's keep the party rolling. Let's go to Maxime. Maxime, he says, new trader alert. Well, welcome, Maxim. He says, sorry if this is a dumb question, but I'm a new Robinhood customer. No dumb questions, Maxim. We're all learning together here. He says, I opened the account recently, and I am considering my first options trade. A friend told me that I'd be taxed. I'd be taxed on any money I make. If I haven't made any trades yet, will I still be taxed? Or do you get taxed for just having the account? Thanks for reading. Well, first off, caveat, Maxim, neither Dan nor I are CPAs or anyone really qualified to give tax advice. So just bear that in mind. We're here for the options, not so much for the taxes. But that said, you haven't done anything. You've just opened an account. So no, you're safe. You're not going to get taxed. Now you start making some trades and hopefully maybe listen to some of our early shows. You start making some money. You're going to be taxed on those gains. So yeah, if you make money, you will be taxed on the gains, but not if you haven't done anything. And hey, if you lose some money, which we hope doesn't happen, you can also write that off against some of your any gains you have and also take a certain amount of losses against your regular income there. So can help you there as well, even though we don't want to lose money. So Dan, anything to add for Maxim, who's worried he's going to get taxed just for opening a Robinhood account? Sir?
Yeah, don't be giving our government any ideas, man. That'll be the next thing. Oh, you open an account.
You want to trade, eh? Here's our $500 trade opening fee.
You're right. Yeah, don't give any ideas. But no, I mean, that's the good news is it just ends up being effectively a percentage of your profits. And I always just like drive that caveat, really home that I'm definitely not a tax expert. I hire somebody to do my taxes because I don't have that expertise. But, keep in mind too, if you make money on one trade, if you make $500 on one trade and lose $500 on another trade, those are the only two trades you make this year, your profits were zero. And you're not paying, it's not like you pay taxes on the winners, like the winners and losers offset each other.
Indeed. So don't worry. Who was it? Maxim there. Don't worry. If you just open an account, they're not coming for your monies yet. But if you start making some, hopefully you do, then you have to kick back a little. Yes. But hey, those are first world problems, right? All right, let's go out here on this one. Let's go to TTN. He's got a good problem, actually, Dan. He doesn't know it, but he does. He says, I recently bought a March 17-15 put spread in Ford. If the owner of the short 15 put decided to exercise their option, what happens? Will I receive the full value of my put or only the intrinsic value? Also, can I assume that the 17 put option that I own will automatically be exercised as well? Well, a lot to unpack and perhaps clarify here. Last I looked, Ford was hovering around 17. Oh, it's up to 18 today, 18.20. Nice rally today, $1.50. So quite the pop out there in Ford today. So unfortunately for you, TTN, your 17-15 put spread is not in the money right now. But in your hypothetical scenario, you bought the put spread, so you bought the 17 put, you sold the 15 put. Listeners, he wants to know what happens if the person he sold that 15 put to decides to exercise their option. Well, let's workshop that scenario a little bit, shall we? So what does a put give you? Put gives you the opportunity to sell an option anytime during the lifespan of that option at the strike price of that option. So what you have done, you have bought a 17 put, giving yourself the option to sell that anytime at 17, which you wouldn't want to do right now. The stock's about 18.20. And you also sold the 15 strike put, which gave someone else the option to sell that stock anytime at 15 during the lifespan of that option. So if they exercise that, not only would they be losing out on all the time premium they paid for that put, which is their problem, not yours. But guess what? Guess what they're doing? They're exercising that option. So they are selling to you that Ford stock at $15. So the stock's $18.20 right now. So guess what you can do, TTN? You can instantly turn around and sell that stock for a nice $3.20 profit right now. So if in this hypothetical scenario, this were to come to pass, you should say thank you to that person because they are giving you literally free money in this sense, which is why you don't really often see. Hopefully the broker would maybe step in and say, maybe you should sell the stock at the market rather than this too. But you never know these days. Things are crazy. Dan, anything to add here for TTN? He wants to know what happens if he buys a put spread and someone exercises that short leg.
Yeah. So, I mean, Mark answered the question. Not too much I can add there, except just sort of an overriding principle that it's important to understand this. So I'm really glad that you're asking that question on the show because, like you just don't want to end up with these unpleasant surprises. Like, hey, what happens if I get assigned on this? Do I get automatically exercised or, on my lawn? Like knowing the mechanics of what can happen can prevent unpleasant surprises that can be costly. So, definitely, always understand what you're trading and what the implications are. And, like Mark was talking earlier about, USO and that kind of stuff. It's not always easy to understand these things. And it's not always easy, but it is important.
All right. Oh, yeah, I forgot he also asked, is his 17 put going to be exercised automatically as well? The answer to that, TTN, is no. This kind of 15, in your scenario, this 15 put assignment is kind of a bit of an aberration. I wouldn't expect anyone else to act so irrationally against their own best interests. So, no, that put will not be automatically exercised. So what you will have now is effectively long shares and a long put. So you could, you could sell that stock for quite a bit of money and just take the whole thing off if you wanted and still be pretty happy out there. But no, they're not going to automatically exercise your 17 puts just because someone went crazy and exercised their 15s. Crazy time. Let's hope, TTN, that does happen to you someday, because that would be a nice, fun windfall. If it does happen to you, listeners, reach out to us. Let us know. We want to share in all of your glory and all your fun out there. But Mr. Dan, unfortunately, that music means it comes to the end of another epic sojourn. Man, we went all around the horn today. We went to the energy markets. We went to Ukraine. We went to the vol markets. We went to tax land, to crazy put spread exercise, all kinds of stuff, listeners. That's why we love you folks. You keep sending us curveballs in all sorts of different directions, which we love out here. Mr. Dan, before we go, if folks want to reach out to you to discuss any of this stuff in more detail, or perhaps learn about your upcoming retreats and webinars, where should they go? What should they do?
Yeah, make your way on over to markettaker.com, and we would sure love to meet you in person in Sonoma Valley, California, in the first week of March. We're going to be there, and we would just love to have you join us. So you can definitely make your way on over to our website and just message me. I'll send you a link to read, see if you want to make the decision to come and join us, and it'll be super fun.
First week of March? It's that soon? It's now?
Wait a minute, did I say March?
You said March, yes. I was like, we should be there right now.
Oh, geez. First week of June.
June, there we go. Okay, thought so. I was like, plus then I missed my invitation. It got lost in the mail, obviously, if you're there right now. I expect my first class accommodations and all the other good stuff that I've become accustomed to over the years. All right, listeners, if you want to check that out for yourselves, markettaker.com is the place to go. And of course, there's some fun classes and education and webinars you can get in between now and the first week of June out there as well. Check out a book or two he's written as well. Passarelli, you know where to find him. 2 S's and 2 L's and only 1 R. Well, there you go, Dan Passarelli. And we got to get on out of here, listeners. Brian will be joining us later today, live to tape, so you'll be getting your second dose of Education Wednesday on the on-demand, which, again, is a reason if you're just listening to Options Bootcamp. I know there's some of you out there who do. If you're just doing that, you're missing out on even our other educational program, which is Options Playbook Radio, which just had its 400th episode spectacular. So you missed out on 400 great episodes of content. Luckily for you, they're all pretty evergreen, so you can get in there and listen and learn and have a good time over there. So if you haven't done so, make sure you're listening to the full network. You're missing out on a ton of stuff. And, of course, we'll be back here tomorrow. This week in Futures Options. We'll get into more of this future stuff if you're so inclined, as well as, of course, episode 2 of the Option Block Friday, Volatility Views, where we'll get into a lot more detail on all this stuff, VIX, UVXY, VXX, the futures, the options, all that good stuff, and a whole bunch more, as well as Options Oddities after that. For all of you Secret Club folks, then back again next week, all the way through to another Education Wednesday, another episode of Options Bootcamp. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available on the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.